Hey everybody, Simon Hudson here in beautiful Squamish, British Columbia, looking at this first episode of the Equity Curve podcast, newsletter, YouTube channel, video, whatever it is. Anyways, I'm not a financial advisor. My videos are the topics and the topics are discussed are my opinions and are presented for entertainment purposes only. Information should not be construed as legal or financial advice. It is always up to you to do your own due diligence. It's your money, so make your own decisions. That being said, I just want to talk about a couple of things that are going on in the stock market right now, and that is that there are strong uptrends going in both the long term and the medium term. And the short term still says that there's an uptrend, but we have hit a bit of a ceiling. Today was quite interesting because we did push up against that ceiling, and if we continue through it, then we could be off to the races for a little bit more. If not, we could be bouncing off of that ceiling and coming back down. We are extended to the upside quite a bit. So we have to realize that often when that happens, there is a pullback. We're over 10% above the 200-day moving average, which is usually a point that the market contracts. However, in the long runs that we have had historically, that has continued to rise. The recession indicator is still flashing red in a big way, and the signal sheet is starting to indicate that there could be a black swan event within the next 6 months. So we have to take that into account when we're planning. I do. And what I do personally is I always look at if there's the concern of a black swan event or something major happening. I typically switch to index trading. So you're looking at the SPY, the Qs, that sort of thing, just so that you're easy in and out. So if there is some sort of a major catastrophic collapse, you're not paralyzed by looking at just what your not paralyzed, sorry, looking at all of the stocks you have. Instead, you've got one thing to get rid of and you can move very quickly. And the market has become very complacent. The VIX is quite low, meaning that this is the time when those sorts of things can happen, when everybody's just chill and relaxed about what's happening. Other subsidiary indicators that I follow, they're also showing that there is complacency and a possibility of some volatility here. Under these circumstances, I no longer will take long overnight positions. I'll hold, but I'm prepared to get out as quickly as I can. So that's kind of an indication of what's happening in the stock market. Those of you that follow my Squamish real estate news podcast, videos, whatever, you're going to find out that this is going to have some impact and there will be some crossover. But right now, the market as a whole is in a general uptrend, but we are very cautious and being prepared for any sort of a pullback here. So again, I tend to stick with index trading at this point when there's a lot of uncertainty, as it's easier to get in and out of the market. Hope that's provided some value for somebody. If you want to make comments or you want to ask me questions, I'm happy to answer them. All right, take care, everybody. Best of luck with your trading.